if we look at the success rate of traders, a lot of places say like 90% of them fail, right?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, this might be kind of a weird one for most people, but I got to thinking about a person's sense of identity and how that relates to trading. So do you think that a strong sense of identity, personal identity, makes a better trader?
It depends. Like most thing in life, I would say like a lot of times you'll see these gurus and they're like really strong personality, especially if they come from the institutional background. Like a lot of the guys that were on the floor, they're physically imposing people. Yeah. Like they're used to being kind of dominating, and like in the floor, that was important, right? Because you had to, like, you wouldn't be heard. You wouldn't get your orders filled if you didn't catch someone's attention, right? So some of those guys can be, and then also just when you trade a lot of money, there's a lot of ego involved. There's a guy actually right around the corner from me, and he had a big, huge fund. And I don't know if you heard about it, but there was somebody in January of 2020 that was putting in a lot of orders, a lot of short orders. He went he went short the CAD yen, like short the indices and stuff like that, like put on huge orders, a lot of options and stuff, assuming that the market was going to tank. This was in January 2020, where most of these orders, and people were like, who is it? Who is, like, there's a lot of noise, like who's putting in this mystery trader or whatever. Well, it turns out it's like my neighbor, not my neighbor, but he's around the block. He's literally like a block away, right? Yeah. And a much nicer house. And anyway, he and his wife both run hedge funds, and apparently he had he bought a bunch of mask companies too. Did all this in January 2020, assuming that that we were going to have the big crash, right, from the virus. And so I found that fascinating, right? That he was like, he basically went all in, with his fund, and he was like, and it cashed out, and he made like 2,400% or something like that. It was extraordinary, right? Because obviously the market did fall in February and March in 2020. So after all the news came out and the markets finally kind of panicked. So that kind of thing, and George Soros is famous for that, taking these really strong positions against. So when you do that, that's an ego feed. You know what I mean? Like that can really mess with you. And what that means is later on, you might get to a position where you're just completely convinced that that's the right side, and maybe you're not on the right side, and maybe you go full bore like Soros and Andrew Barry, I think that's his name, the guy from The Big Short, and my neighbor guy. Like these people can get really, that I think that can be a problem when the ego gets involved. I'm not saying that those people have that. I'm just saying that's definitely potential, right? That's definitely a potential for that when you have these big, huge wins. It's like the old adage, they say the worst thing that ever happened to me when I was a trader is the first trade I took, or the first week, or the first month, or whatever, the first time period, I made a bunch of money. That was the worst thing that could have happened to me, right? Because then I think it's easy. I think I know what I'm doing, and blah, blah, blah. And it was all downhill from there. Like you hear stories about traders where that sort of thing happened. It kind of happened to me, where it wasn't really me. It was my friend who tripled our account the first night or the second night that we were trading. But then we lost it on by Fridays, by the end of the week. But that kind of thing is true. But what I think, the other thing that I think you might be getting at, I'm not sure. So there's that ego part of it, but there's also a sense of confidence that's needed, right? You can be overconfident and you can really go for it because you think you know what's going on and other people don't, right? Like you're the mind that understands the markets and all that stuff, especially if you're into fundamentals. Like fundamentals get really into that. People that are into fundamentals, I think, can get really into that. But the other side of it is having the confidence that you need as a trader to pull out of those terrible drawdowns. And that to me is discretionary, systematic traders. That's a real big deal, because that's when you're at your weakest. So you and I both know that when we're in drawdowns, that's when you're at your weakest. That's when you are most susceptible to making the big mistake. The big mistake could be doubling down. taking a big, huge position to make back those last 7 losers. It could be trading, changing your strategy and modifying it and saying, oh, well, if I had done this instead, I would have lost, would have avoided all those losers. Or it could be that, thinking that the markets have changed, all these algorithms and robotic traders and institutions have changed the market, so my system doesn't work anymore. Like all of those things that creep up in the moment of doubt, you need to be able to have the ability to squash those.
Mm-hmm.
It's true that those things could be true, but in most cases, it's not. In most cases, it's just the demons that are creeping up and scaring you. Mm-hmm. That's how I see it. So I think you do need that confidence. You do need that ability to rebound from poor periods of trading. But you don't want to swing so far that you think you are like Mr. Market and you know exactly where things are going to go. So that's my take on it, is that resilience and confidence is really important. So that aspect of your personality is key. But also, being open to new ideas is good too. Like being open to, like, for example, if you just trade trend following strategies and you never take reversion to the mean strategies, that's a missed opportunity to diversify. So being open to new ideas and stuff like that, and build strategies that are complementary, that can also be like a personality fault too. But yeah, so those are sorts of things that I think about when I'm thinking of that. What about you? What are your thoughts?
Oh, yeah, no, I was talking more about like having the confidence to come back. And I think if we look at the success rate of traders, there's a lot of places say like 90% of them fail, right? I think that's really indicative of how people think in the general public. Like you see a lot of people following whatever's on the news, or they're following this guru, or they like to follow this guy or whatever, right? And they don't really develop that sense of their own personality. And I think that's really important to having that confidence to go forward in trading, especially when most people don't know anything about trading, right? So that's kind of more what I was getting at. But you have a good point there. You can really get overboard, and you can start to think you're the man, and you're gonna just make all this money.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, you'll see it with these guys that are veterans, especially in the institutional world. Like in the reason why I say this, because I hear people talk about it. They go to like trader groups, because they have these trader groups in Australia. It's called the Australian Technical Analysis Association, ATAA. Okay. And so they'll have these talks, and I've done a few of them or whatever. But like people will come to me that had gone to the talks, and they're like, dude, that guy's crazy, man. He's got so much ego and stuff. And they tell me, you know what I mean?
Yeah.
But now I think what's happened is some of these chapters, not all of them, the Melbourne one's really good and stuff, but some of these chapters, what happens is they have like, I don't even know if they meet anymore, but when they did, they had free drinks. So people would go there, and that like a lot of alcoholic traders would show up because of the free drinks. That totally went downhill from there. But yeah, so you'll hear things about, oh yeah, so-and-so came, like a famous trader, and they'll be like, dude, that guy's so much ego, and stuff like that. So it's interesting. Yeah, it really is interesting. And I think what you were saying about the 85% or 90% of traders that fail, what's interesting about that is, like, I think of other markets. Like, people say that about like what you and I do, trading markets, but there are other markets that people just assume that like everyone makes money. For example, like real estate. Yeah. Everyone just assumes that if you get into real estate, like it's always going to go up. Like, to me, that's so funny, because I look back at my life and like what happened with my parents. Every time they sold the house, it was at the bottom. And every time they bought, it was when they were getting really expensive. Like it was like, it's like magic. Like it really is amazing to me. And I don't think that's a unique thing. I think there are a lot of people that pile in when there's a frenzy right before the top, and a lot of people that go, oh my gosh, this neighborhood or this city or whatever, it's done now, and they sell literally at the bottom. And I saw that close up. I mean, looking back now, I see what happened. I didn't kind of realize it at the time as a kid, when we were moving around, because I moved around quite a bit as a kid. But yeah, it is interesting to me that like everyone says that the markets are so hard to trade, But then some markets like real estate apparently is just like, everyone has the golden touch, whatever. I don't know. It's crazy to me.
Yeah, no, I saw this story, this news story about houses in East Bay, San Francisco, Berkeley, Oakland, and all that. And some people are offering like $1 million over the asking price. And that just like blew my mind. Yeah. But that's a perfect example of like, people think it's going to go up forever, and it probably won't.
Yeah. It's so true, man. It's so true. Well, we have over here in Australia, we have interesting. They have off market, so you can buy a house that's off market. And so I always ask the agents, I'm like, how is it that they're selling it and it gets sold, but it's not on the market? Does that mean it was on the market? And so I guess what it is, it's like people that are like, they're going to sell their house at a certain time. Because over here in Australia, everyone wants to sell their house in the spring, because in the spring is when everything's nice, and apparently the prices go up every spring. I don't know. That's the theory, right? You don't want to sell in the winter, which as we're recording this, we're going right into winter right now. So everyone wants to wait until springtime to sell their house. So you have these off-market places that are not for sale. No one knows that they're for sale. But if you go to an agent and the agent knows, someone, and they knows the owner or whatever, then you could actually buy it. But the thing is, you have to pay the price,
spring price,
for the spring price, the October price, the September October price, which is spring over here in Australia. You can't pay the winter price. That's so funny. The whole thing is funny to me. I just think it's hilarious. But yeah, whatever. Yeah, it's the way things are, right?
Yeah. All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.